Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily stock market analysis, where we look at what happened in the market during the day and what we can learn from it and how we can plan for a better trade. So we had a volatile day, and the good news is that we have recaptured the 18K once again, but we're right below the resistance zone. Let's see more details in the charts and see if this is going to sustain or not. Before that, this is just another view to remind that where we are. Let's look at this. So this is the resistance zone from where we have broken out and made the all-time high. This is a weekly charts we talked about. And here we have the Banknifty also, which is also having a trend line resistance which is broken out, and then all-time highs are made, and then it fell down and then consolidated, and then it's stuck there. It's stuck there since weeks. How many weeks? Let's see. Look at this. So what you see on the left side is Nifty and right side is Banknifty, right? So here we have a candle. Let's remove all the let's look at this. So daily chart, that's what you're interested in, right? So look at this. This is such a bullish wide range candle that we have seen. In Banknifty, it's a indecisive doji, right? Banknifty is weak as compared to the Nifty currently, but Nifty has shown a very wide range bullish candle, and remember we had retested the previous and made a new swing low, and we're at a very crucial zone which is tested now more than 5 times now. Banknifty also has tested that and has been testing that same zone, support zone of near the 42A. 41,600 zone has been the support zone. Nifty gets a 17,750 and 61 zone. So that's very crucial, and that's where we are. So there is a change in priority bounds that's possible from here. On the weekly also you can see that possibly cannot be rolled over. Let's get the numbers and see what all we can make out from it. So today it was just 158 points gain from Nifty and 67 point gain from Banknifty. Banknifty has formed a decisive doji, while Nifty has formed a bullish wide range candle. Intraday is very volatile, very volatile, right? It has multiple V shape. It is a gap up, and then half of that is given, and then again reversed with a V shape, right? Multiple V shape. Same with Banknifty also, gap up, failed, fall down, and then again reverse. Very difficult to trade in such markets, so very volatile. So how is it that it's 0.80% up move from the gap up from the Nifty, and then 0.58% downfall, and then again another 0.70 up move. Banknifty 0.50 gap up and upwards, and then reverse 1.5% down. So the fall reversal was more intense on the Banknifty. The gap also was less, and finally then 1% up again and try to move up here. So that's how volatile it was. Very volatile intraday, and price action is 20. So finally the Nifty closed at resistance below the 20 DMA, and Banknifty has closed it below 20 as well as a 50 DMA exponential moving average. But as we said, we are changing priority possibility still there. We had a crucial resistance from where the breakout had happened. That is all there, and the new swing low had already formed. And the price action says that it could either break it only after 18,265 and 18,430 on the upside. And head and shoulder pattern is there on the Nifty. We can see that. That's on the daily time frame, right? So it's a very lengthy one, right? So this is where the shoulders are there, and this is the head, and neckline will be here. So that is not a completely breach. So that is also on the negative side. It's on the daily charts, and this wedge is also, you've seen that it's on a downward trend. The Banknifty is still a downward trend. It's not going south on Nifty. So it has been going one day south, one other days north. That's what is happening. So this support that we have is a very important support. It's a confluence of multiple supports of previous swing lows and Fibonacci levels and trend lines from the core 20 time period, and multiple support zones, changing priority bounds on moving averages. All of the support confluences there. So this seems to be a very strong, and a breach below that would be very crucial to watch out for. Levels remain more or less the same. 18,070 would be Fibonacci, 38 retracement level, and 142 and 18 to 60 would be resistance of above that. And 1980, 959, 18,000, 18, 17, 825 also all support zones for the activity retracement. 76761 on downside after that, and 7642 previous string low supports after that. Banknifty 42 231, 42 363 is previous string high resistance upside. Then Fibonacci 23 42 560 is there, and 41 836 is support up downside. 41 587 is Fibonacci 38 support after that. Again, all of these levels, we have 2 more days for the expiry. Correlate this with the options open interest data, then you should be able to decide on what kind of positions at what level, what side has to be taken to some extent. Bollinger Bands at the beginning of a contraction was is what you see in the both indices, right? If you put on the Bollinger Bands, it is taken a bend, and then that indicates consolidation, but the bearish bias because it's still below the moving average 20. Banknifty also beginning of the contraction is seen today. Started loss expansion beginning. Today's contraction is what is happening. So sideways what as of today, it's what it indicates. Momentum is sideways, but it's rising momentum in both indices. Trend indicator ADX is showing that it is the MNIT both when bearish is reducing, and strength of that ADX trend indicator is reducing, but it is in negative zones, right? It just cooled up again in 40.95. This has been happening since last many weeks. Big spike 7%, then reduce, cools off, then again spikes, but never ready to go below the 40. So some uncertainty is there, and neither is it ready to move up also. So looking out of that, and we have short covering on the Banknifty, which could help the Banknifty to cover and catch up with the Nifty tomorrow probably. But it was overall options high, features high, showing that it was Nifty the Banknifty is bullish in nature. It was long below Nifty and short covering happened in the Banknifty. Levels for the options high data for the expiry on the Thursday, January 19th, 2023 is 7900, 18, 200 on Nifty. That's where the highest put and call writing is there, 42,000, and 44,000 is where the highest put and call writing is here on the Banknifty. That is a little confusing, right? 42 and 44,000 is 2,000 points, and we have 2 days to expiry. So big short current rally or bust out up move is expected with option writers in the Banknifty. Nifty range is reasonable. 7,900 seems to be good support. Look at the PCR, it's bullish. 1.09 is bullish on the Nifty. But Banknifty is set to catch up, but it is also to the bullishness, you can say 0.75. Now, how did the sectors perform here? Almost all sectors did well except pharma, which closed flat. Right? And IT did well, FMCG did well, metal, realty, all of them. Not metal, but realty, FMCG, and IT did well, more than 1%, or near to 1% of up has happened. Metal also did well, 0.21, and auto did well, 0.5% up more. So, although it did well, pharma did close right flat. All the sectors, across sector damage is not happening in spite of all this consolidation happening. So, it is all sectors sideways momentum that you're seeing, not a bearishness at heavyweight. Heavyweights analysis is some heavyweights that we analyze. If you see that you can, it's ICICI alone. What's happening to ICICI? Probably the big fire selling is happening. Something that we do not know is known by the institution, and they're selling it big. And ICICI Bank is closed right. That alone has closed right. All of this across green, HDFC twins, Lions, TCs all made greater than 1% up move, greater than or equal to. Right, this is not negative. And in Vienna, I've also moved. Kodak Bank also moved up, but it's less than 1% of up that happened on these two heavyweights. And ICICI Bank alone, that alone is the stock heavyweight that is in the bearish zones on the shorter momentum, and while others are on the sideways momentum, right? So there's something to make it not of, but here also you can see that HDFC only one stock is now gone to the bearish, so they're all recovered for now. So across sector also, industrial sectors also, there's no big bearishness that is seen nor there. Institutional data surprising after 17 days of selling FSS and report something 200 crores of buying has happened in the cash. And DIS also did not buy much, but near to 100 crores of buying in the cash happened. So both the institutions support, and that's how we had a green day. So we had a reversal. And so that's some good news. No, at least a small amount of buying is happening after all. The entire 3 by 4th of January is selling by the foreign institutions, which is top. At least it's good. Crude oil is rising up, and that's a worry. It's above 80, near to 81 now. No, but it had a pullback of 44%. So it's an apparel channel. Every chance that it can spike up, but as long as it remains near the below 90 levels, at least it should be okay. Right. So there is a concern, but yeah, oil is spiking up slowly. On the sideways as of now, from bearish zones, it has climbed to sideways and then rising up. Moving on to the currency, dollar index is also bearish. It's more falling down. It's on line 2.3, which is good, but it's not reflecting that much in the USD and currency pair. Rupee has not appreciated too much. It's really 81.7 for a dollar. Right, but it's rising green. That's what it's showing. Right. So dollar depreciate, but rupee is not appreciated yet. Gold is flat as of now. It's falling, but it had made good up of 17% above. Right, momentum is in the bullish zones now, so gold is spiking up whenever there is a market is crash. Normally, is that, and we'll come to know very soon because gold is at a channel top, and then it's a couple of panel. If it's breaking out, it may make a big move. Would that coincide with a crash in the market as well? Never knows, but yeah, the hedging instrument gold is spiking. But today it was kind of red and flat, consolidating after a big breakout move of 17%. That's what happened. S6 is flat as of now. US indices are flat. We'll have to see both of these indices in the pre-market tomorrow. But US indices is in the edge of resistance on listening wedge as we have been talking about, and we know that it's on the edge. You cannot confirm that it's a breakout on the upside. It had been showing reversals and downside earlier a few weeks back. Now it's taking a U-turn from the support zone and then trying to break out. Will it sustain or not? We'll have to make a close watch. But if this is breakout is happening, there is some important data also coming. You have to be cautious on that. Everywhere is the same, so there's no confirmation yet. It's at a resistance point basically on the Nasdaq, and this is Mayfind, and also similar listening wedge. Top of the listening wedge is where we are. So gotta keep a close watch and see what happens. Major events: yours Fed inflation data, your Fed speeches, and jobs data, and all that is coming today and tomorrow and day after basically. So and 18-19. So we have to keep a close watch. Expiry may be volatile. Markets may react next day. So we'll have to always see the pre-markets on Wednesday and Thursday. Probably Friday also, right? So major events are ahead. US markets at crucial points. That's what it is. Right. Two stock picks: Tata Communication, Mahindra and Mahindra both long. Tata Communications is long because it's head and shoulder inside a descending wedge, which is confirmed to a broken out. And momentum is bullish and trend is also bullish and rising, so there is every chance that we can get a decent risk reward for swing trades. Mahindra is auto stock, auto major. There is a divergence there, so you have to be cautious on this. Whether it gets reached above or not, you have to watch. There is a possibility that it can fall back into support zone and take a moment from there. So some small move, but you just have to watch and trade if it moves above the box. That means this candle on the November 7th high, if it bridges above, that's a good opportunity that we break out. But tight stop losses below this entry week's low has to be made. Entry is to be made on daily, not on weekly. So basically, it's a rectangle pattern, and momentum rising with the bullish zones, and trend is also closed over to the bullishness with flat strength. So it's not a signal. It's not a trade that we got the signal yet, but there's a potential that it can catch up. So you have to keep very close watch on that. Catch it at the right time. If you're not able to make the right entry at the right time, we cannot. Basically, we have a pattern that is consolidating, and any consolidation will not last long. It will break out either side. It's moving up. That's a long trade for you. And to support that, you have to watch the momentum, which is already in bullish zones, but just have to watch whether it sustains it or not, right? So Mahindra and Tata Communication, two trades on the wrong side, swing trades for the next few days. Now that we've seen all this, let's wrap up what happened today and what we can look forward ahead. So market refused to fall. That's what is happening. So it had broken out, retraced completely, whatever it has gained and lost everything, and then at the same point, the same crucial support zone, it is deciding it was indecisive last week. It is consolidating since several weeks, and it's not ready to fall down either. So yes, it was If one day it's red, the other day it's green. That's what's happening. So it's refused today. It's confused again and captured the 18K, right? But it's again once again right below the 20 moving average. So on the weekly, it's anyway at a crucial resistance zone, which is now acting as a support zone. That's what we are, right? But the view, there is every possibility that it can bounce. A lot of things are in favor of the bulls. The confluence of the supports of multiple things, as we had discussed earlier. That's all in favor of the bulls, but the chart is still saying that it's below moving average. It's still having a downside bias for the Bollinger Band. Sideways momentum is what it says, although it's not bearish. Trend is bearish. Fyers not buying too much. They have been selling continuously for the last time. It's still weak. US market is a very crucial point of breaking out and resistance also. All of this make me think we have a bearish view itself for the coming day, even though a lot of things from the support side for the bulls. VIX is cool off today. That has been doing that. It's not ready to cool off below the 30 or below the 14 at least, right? So, but it has got everything that it takes for it to move 15% in a week. We had seen that few weeks back. So we are to be cautiously watching the VIX. Uncertainty is there, right? We've already seen that when it corrected 6% from the top and then moved up and down. So all those things can repeat, but it cannot stay long like this at the same one point. It cannot consolidate for long. It would consolidate and then one point in time it will make additions and that will be a big move. So that's what we'll keep watching. 17,500, 18,300 upside downside for the coming few days. 41,500, 43,000 for the coming days and 90 as well. So manage your risk. If it spikes about 20 weeks, stay out of the trade or cut 30% size of plastic. And productive capital, that's all we have. And always have hedge positions, right? If you have overnight positions carried over, have hedge positions and use options. So all these option strategies can also be used to hedge rental incomes, to cover your hedge your long-term quality stock investments. Also, you have videos on that. Check out the playlist. Right? Different strategies in the options. So that's all I have. Mild bearish view continues to be there for tomorrow also, and I hope this analysis has given some clarity to your insights into the markets and your trade plan for the next week. If it has helped you in some way, please subscribe if you're not subscribed and watching this. Please share it to your also all your friends and colleagues and everyone, because we have very few subscriptions and appreciate the help as well. Put in your comments, feedbacks, all of those. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.